Welcome to the Deep Dive. Today we're tackling something pretty fascinating, a real paradox in the investment world. It's about the S&P 500, the big benchmark for the U.S. stock market. We keep hearing it's doing great, hitting records. But there's this other story. If you measure it differently, it looks like it's completely failed. Yeah, it sounds weird, doesn't it? Yeah. The news says booming market, S&P 500 at all-time highs in dollars, just what you'd expect. But then someone measures that exact same index against, say, Bitcoin, and suddenly the narrative flips. Total collapse. So our mission today is really to unpack this. How can the S&P 500 be up, 106% in U.S. dollars since 2020, and yet somehow be down a massive 88% against Bitcoin over the same time? We need to figure out what this tells us about how we even measure growth anymore.
It's definitely one of those headlines designed to make you stop and think, maybe even stir things up a bit.
Yeah.
But it forces you as an investor to really look at your assumptions. I mean, we all know the S&P 500, right? Tracks the 500 biggest U.S. companies. It's the standard. And it's earned that reputation. Historically, it's been incredibly consistent. Since 1957, it's given investors around 6.68% annually, adjusted for inflation. That's solid. It's seen as this engine for long-term, pretty reliable wealth building, the barometer of the U.S. economy.
Absolutely. And if we just stick to that traditional view, measuring in good old U.S. dollars, the S&P 500 looks amazing right now. Like you said, record highs. Just since the start of 2020, it's jumped over 100% in dollar value. That's huge growth. Really shows the strength of those top companies.
Exactly. And that's why figures like Warren Buffett have historically been such big fans. He often calls it the best bet for the average person who doesn't want to spend all day picking stocks. His famous advice, right? The 90-10 strategy. 90% in an S&P 500 index fund, 10% in short-term government bonds. That whole approach is built on that idea of consistency beating short-term flashy gains.
But maybe that's the core of the debate right there, consistency. If your goal is just steady, reliable, single-digit growth year after year, okay, the S&P 500 is hard to beat. But what if the world's changing faster? With tech leaps and, questions about currency stability, maybe consistent just looks slow compared to something else. And that brings us right to the other side of this comparison.
That's exactly the point. The friction comes when you change your unit of account. You stop measuring in U.S. dollars, which, let's face it, gets printed more and loses purchasing power over time. And instead, you measure against something like Bitcoin, designed to be scarce, deflationary. Suddenly, that impressive 106% dollar gain, it looks tiny. The S&P 500, measured in BTC, has dropped 88% since 2020. That's what they mean by relative collapse. And we should stress, this doesn't mean Apple or Microsoft or any of those 500 companies are actually failing or losing money. Not at all. It just means their growth, even though it's great in dollar terms, hasn't been nearly fast enough to keep up with Bitcoin's appreciation.
Okay, so how do we wrap our heads around that? Gaining value, but losing relatively. Yeah. The sources use an analogy, right?
Yeah. It's actually quite helpful. Imagine two vehicles on a highway, both moving forward. The S&P 500 is like a reliable family sedan. Since 2020, it's been accelerating nicely. Moving ahead, that's the 106% gain in dollars. But Bitcoin is like a Formula One car on the same highway. It's just blasted past the sedan, going many, many times faster. So even though the sedan is still making good progress towards its destination, compared to the speed of that F1 car, the sedan almost looks like it's going backwards, or at least standing still. That shocking 88% drop. That's just the sedan's progress measured relative to the F1 car's incredible speed. It's about momentum, not necessarily the direction of travel itself.
Momentum versus direction. Okay, that makes sense. Let's put some hard numbers on that momentum gap since 2020. It really highlights the difference. If you put $100 into the S&P 500 back then, you'd have about $210 now. More than double your money. Pretty good by most standards. But if you put that same $100 into Bitcoin, well, today that would be worth almost $1,500.
Yep.
So $210 versus nearly $1,500. That massive difference is why this whole discussion is happening. It's not really about the S&P doing poorly in its own lane. It's about Bitcoin doing something, historically unprecedented.
And it's not slowing down, apparently. The sources mentioned Bitcoin recently hitting $125,000 for the first time, and it's up something like 32% just this year in 2025. It just keeps outperforming almost everything else, which makes that relative comparison with the S&P look, frankly, worse over time.
Okay, so this brings us to the critical thinking part. If the S&P is doing its job, giving solid dollar returns, why do even the sources pointing this out say the comparison isn't, quote, exactly fair? We need to get into why they're fundamentally different beasts.
Exactly right. It's like comparing, an elephant to a cheetah. Both impressive animals, but built for totally different things. The comparison feels off because they differ in at least three key ways. First, just what they are. The S&P 500 is broad. It's a basket of 500 different companies across all sorts of industries, diversified by design. Bitcoin is, well, it's Bitcoin, a single digital asset. It's like comparing a whole economy, almost, to one specific, very volatile commodity or tech stock. The risk profiles are worlds apart.
And that risk connects to the sheer scale difference too, right? The S&P 500 represents companies with a combined market cap of, what is it, $56.7 trillion? Huge, established, lower risk, generally speaking. Bitcoin's market cap is much smaller, maybe $2.47 trillion. Still massive, but way more volatile day to day. We could use that metaphor the sources suggested. The S&P 500 is like a giant established cruiser ship. It's built for safety, reliability, carrying lots of value steadily through calm waters. Low risk, predictable journey. Bitcoin is more like a high-speed speedboat, super fast, agile, designed to cover distance quickly, but much more susceptible to choppy waves, sudden changes, and yeah, the risk of flipping over is higher.
That's a good way to put it. And the difference isn't just size and risk, it's almost philosophical. Or maybe structural is a better word. The S&P's gains are measured in dollars, a currency that can be, and is, created in increasing amounts, which tends to dilute its value over time through inflation. Bitcoin's whole narrative is built on the opposite. Provable scarcity, decentralization, a hard cap on supply. It's designed essentially to gain value relative to currencies that aren't scarce. So that's why the comparison, even if unfair, apples to oranges on risk, is so thought-provoking. It makes you question the denominator itself. What should we use to measure wealth? For decades, it's just been the dollar, unquestioned. But if something built on scarcity consistently outperforms that dollar measure and seems to hold purchasing power better, well, it challenges the very definition of value.
Right. It shifts the question entirely. It's not just how many dollars did my investment make? It becomes something more like how much actual future buying power did I preserve or grow, regardless of what happens to the dollar itself. Okay, so let's try to synthesize this. Key takeaways for everyone listening. The S&P 500 is still the king for traditional dollar-based wealth accumulation. It's the reliable cruiser ship doing exactly what it's supposed to do, solid returns, lower risk. But when you measure its performance against a high-growth, scarce asset like Bitcoin the speedboat, the picture changes dramatically. That relative comparison forces us to rethink what performance even means, especially if you're looking for maximum growth or protection from currency debasement.
And that leads to a really interesting final thought, something for you to mull over. As we continue to see things like inflation, debates about monetary policy, government debt rising, will more and more investors start looking past the dollar? Will they start using assets like Bitcoin, fundamentally scarce assets, as their main benchmark to measure if their wealth is truly growing, truly holding its value? If that shift happens, maybe that classic 90-10 S&P strategy, measured in dollars, starts to look, well, maybe a bit outdated, perhaps needing a rethink for this new environment.
That's definitely something to chew on. Is the risk-free benchmark itself changing? Wow. Well, if you found this deep dive into relative performance and changing benchmarks interesting, please do follow, like, and maybe share the show. It helps others find this kind of analysis. And you can also follow What Bitcoin Taught Me on Twitter X, Nostr, Blue Sky, Threads, Instagram, Facebook, and LinkedIn for more content. Thanks for tuning in, and we'll catch you on the next deep dive.